All right. Hey, everyone. Ben Nelson here. It is time for another market update for the Portland, Oregon metro area. Apologize, had this scheduled for noon and had some technical difficulties, meaning I didn't know what I was doing. So anyway, finally got it figured out, and here we go. I'm going to go ahead and share my screen here so I can jump over to the market action report from January numbers here and show you what we're looking at. Let's see. Looking here at the market action report, you can see we had a huge increase of listings compared to December. So we had almost a 50% increase in new listings, which we desperately need for our inventory level. However, all that did is add 0.2 months of inventory on the market. So we jumped from 0.8 back up to 1 month. So it did not really make a huge dent in what we really need, even though it was a very large increase from the prior month. It was a little bit less than last year, what we had new listings on the market, but again, a huge increase from December. So a good thing to see more things coming on the market, but we're still not even close to there. We still need more inventory. And again, we have the pending sales and the closed sales right behind it. Pending sales up about 25% from December, and then closed sales up 30. Closings decreased because, again, we don't have a lot of inventory. So closings in January are down from December. And then if you look at down here, the appreciation or the change in the median price, that is right here. So this is a rolling average for the last 12 months. But look at this right here. If you look at January this year compared to January last year, it is a huge difference. You got January 463 average price, January this year almost 515, and then median price you've got 406 and 460. So that's like 15% almost. It's 12% somewhere in there for the median sales price, and that's as Portland Metro as a whole. We definitely have areas that have seen a little bit less, and we have areas that have seen a little bit more than that. So looking down here at the average or the active residential listings, we have only not even 2,000 active residential listings on the market. Extremely low inventory, just over half of what we had this time last year, less than half of what we had this time 2 years ago in 2019. So just reiterating again, we're so low on inventory. We really need more. There's more building going on, which is good. I'm hoping we'll see more going into the spring here and have an increase of supply because we definitely need it. Then there's the new listings again. You see it's not even what it was the last couple of years, even though it was a lot more than December of last year. And then pending sales jumped up to so we had an increase from December, but then you see that we have less new listings coming on the market compared to the prior 2 years, but we have greater pending sales than the prior 2 years as well. So it's just getting gobbled up as it's coming on the market. It's highly competitive. So there again, you see the closed sales highest in 5 years for January of this year. And look at that market time. We really this is the bell curve you typically see again is you have more listings coming on during the summer and then it tapers off into the winter. You have the opposite effect with the average market time. It gets shorter in the summer and then gets a little bit longer going into the winter. We didn't see that at all last year. It just was that flat line, and then going into the new year here, just is continuing to stay low with all that demand and people just waiting to jump on things as they come on the market. About half of what it was in 2019 for days on market this time of the year. And case in point, we just put this is out in Newburgh. We put a new construction house on the market on, I think we went live late on Wednesday, literally a bare lot and a sketch. And we had 5 offers well above asking price by the time we looked at offers on Sunday. All very competitive, all very strong offers. And again, it was just literally a bare lot with a sketch of what was going to be built. So we're under contract on that one with a close date here in the summer when it's supposed to be completed. But that's just, even with the product that's not even out of the ground yet, we're getting highly competitive on all those as well. So I'm going to jump over here to look at a couple articles real quick too, because this is super important if you're looking at the market forces as a whole. So we saw a pretty good increase in mortgage rates. This isn't actually the one that I was trying to jump over to, but you can see that on uh, the 30-year fixed rates, they've eked up a little bit. So purchase rates have not gone up a lot, which is good. That's going to keep affordability there for people that are trying to buy. Affordability index here in Portland is still right around 120%. If you have any questions about what that means or how that formula works, feel free to reach out. Happy to go into that a little bit more detail. But it's just a measure of the affordability in the market. So if it's lower than 100%, we're typically considered an unaffordable market. If it's higher than 100%, we're considered affordable. And interest rates obviously play a big part in that. So more purchase rates, they've eked up a little bit, but not a lot. So this is today. Refinance, this is just one source, but you're seeing it a lot. So this is refinance rates. They've gone up quite a bit. You see them went up over a quarter percent. So 3% from 2.75, which is still ridiculously low, by the way. I mean, we've been in such a low interest rate environment for so long. We're just spoiled. It's like, oh, it's over 3%. I can't believe it. But it's still such a good rate. It's incredible. But they are going up. They're feeling pressure from the bond market. The bond market is, they're a little bit, so anyway, I'm gonna touch on this again real quick. So with that going up, you're gonna see, I think, a slowdown in refinances. People have been refinancing like crazy just because the rates are so low. So we'll see what happens if they continue to eke up or if they'll stay steady where they're at now. But I'm hopeful that will maybe also increase some more inventory because people have been refinancing instead of selling. So maybe people that were maybe considering refinancing instead of selling but weren't quite able to pull the trigger. I don't know if a quarter percent is going to make a difference to them in that decision or not, but maybe. And then this other one, so I won't jump over to that one just because I'm just jumping around too much. But basically, the bond market has been feeling the pressures of what they've been doing with monetary policy, and so bond yields affect interest rates. Bond yields have gone up, which, without getting into all the specifics of how that works, basically, if you see bond yields start to go up, you typically you see it's an indication that they're afraid of some things down the line economically, and there are people selling it, so the yield is going up because more people are, the risk is a little bit higher. So what does that mean for our economy? I don't know, but it does affect interest rates. And so we'll see if that continues to trend. The other side of that is, in my opinion, is part of the fear is inflation in our economy. They've been putting so much money into our system. They're afraid of inflation. So what does that mean for asset prices, though? Is typically that means that prices are going to continue to go up. It's just another pressure on asset prices, which is including housing. So if you are on the, because I hear it a lot, hey, people looking back at 2008, what happened then? I'm just going to wait it out. The market's crazy. I'm just going to wait until prices drop. All these comments about that. And I could definitely be wrong. Just there's so little supply. There's still tons of demand. There's still a lot of things propping up the housing market, including low interest rates. But that's not all. They're going to do everything they can to keep a collapse from coming in the housing market again, because it was so devastating. And people bring up the potential foreclosures with people late on payments, all that stuff. A lot of that stuff's been addressed with the moratoriums on foreclosures, with banks being a lot more willing to work with homeowners, and a lot of it's been forced really by policy. But last time in 2008, they really didn't have a motivation to do that. They really didn't have systems in place to work with homeowners. So because they went through that last time, now they have those systems in place. They've actually worked out a lot of payment plans. They've worked out pushing out payments, tacking it on the end. Lots of different ways they're doing that with homeowners, as long as they're being proactive about it when they're behind on payments. And a lot of times lenders are even reaching out to homeowners to try to work with them on that, because they don't want to see a huge glut of inventory come in the market. It's not good for the market. It's not good for their assets. It's not good for their balance sheet and everything, because it's going to affect their collateral if the market starts to go down. So lots of reasons to continue to prop up the real estate market. But the other thing is, like I was mentioning, that if we do see inflation start to, which I don't see how we can't, with how much money they've been pumping into the system and printing, and just to try to keep our economy afloat as it recovers, the double-edged sword to that is that now we have a recovered economy or a recovering economy, and we have all this extra money in the system. And as that gets out there working, it has pressure on prices and it causes inflation. So that can be good or it can be bad, depending on what side of the coin you're on. But all of that to say, if you're waiting and you're saying, I'm just going to wait until prices drop, I think there's way too many forces at work to stop the prices from coming down. And again, all of this is market specific. There sure can be markets that are going to feel it differently than we feel it here in Portland, or vice versa. So there could be some other markets that's not true, that it does actually, they don't see that inflation, that value increase, that asset price inflation going up. But for here anyway, and for a lot of these markets that are really low on inventory and high demand, net migration, all the factors that you are looking at when you're analyzing a market, I don't see prices falling. I think if you're waiting it out for prices to be lower, you could be waiting a really long time. And I think you have to remember that the past does not equal the future. And there's so many variables at play. Just because prices are quote unquote out of line or unaffordable or whatever, it doesn't mean that alone is not a reason that the market is going to come down in price. It really is not. You have to look at the big picture. You have to look at again, touching on inflation again. If that does happen, you're going to see it in wages. You're going to see it in all parts of the economy. And so if you see it in wages and you see wages go up, then that creates more affordability in the market, and that continues to push that pricing of the housing market upwards, because more people are going to be able to afford it with higher wages. So hopefully that all makes sense. That's maybe a little bit too in depth, but I hope not. Hopefully that's helpful. If you have any questions about any of that, I'm definitely not the expert on economics, but I would love to chat with you guys about any of that if you find it interesting or just have some questions about that. But the bottom line is, we still have extremely low inventory. We still have very high demand, as you can see with just if you put a listing, or if you're working with any buyers, I mean, you just see the demand. It's insane. If you don't have multiple offers on your house, you still have to price it right for the condition and everything and for the area, but something's wrong if you're not getting lots of activity and offers very, very quickly. And that's kind of what happened on that one that I mentioned, is we really did price it aggressively, meaning a little bit low. So that really drove a lot of activity and ended up bidding the price up, but also, that spurred a lot of the activity. So we still have very high demand. We still have room for growth. We still have room where interest rates could go up, and it's really not going to, unless they really go up a lot, it's really not going to affect most of the buyer pool. It may slow appreciation a little bit if that happens too much, if it happens more than what we're thinking it will. We still have lots and lots of people moving here. We have lots of migration. There's just a huge amount of demand. So I'm not worried about any of that stuff. As I mentioned, most of the people that are behind on payments, they're getting help or they're getting things pushed off. So we're not going to see that huge amount of foreclosure inventory coming on the market. I mean, we might see some, we probably will see some, but we're not going to see a glut of them coming on. And I expect prices to keep going up based on lots and lots of factors. There's still people out of work, and definitely that's an issue. As far as the home buyer pool, I mean, not an offense or anything, just most of the higher wage jobs are the ones that have recovered, which is unfortunate, but that's, the service jobs, a lot of the lower wage jobs have been the ones that haven't recovered. They're the ones that need help. A lot of those people are not necessarily in the buying pool, or again, that's a super generalization, so don't take offense to that if that's you, but that hasn't affected the demand on housing, is my point. So we've got all the forces there to continue the markets, having the market move strongly forward, and I'm just really hoping to see more inventory. So so again, hope that helps. I'd love to chat with you in person about any of this stuff, answer any questions for you, talk about the market. If you're looking to buy or to sell, I'd love to chat with you about that as well. It's love to just connect and chat and do whatever I can to be of help in getting you from where you are to where you want to be. Make it a great day. We'll talk to you soon.